Time now for a check-in on the market with business reporter Ed Boyd. Ed, we've had CBA's half-yearly results out this morning. I thought some of the really key takeaways were around this home lending. It looks like the data is holding up pretty strong. This is after the government's come and said that there isn't concern about this credit lending crunch on home loans. It seems like the CBA data is backing this up.
Yes, Annalise, CBA said during the 6 months to the 31st of December that it had grown its home loan book by 4%. It now comprises about 24.9% of the whole home loan market, so it's the largest home lender in Australia. And this is obviously in the context of a low interest rate environment. Yesterday I spoke with Suncorp and their home loan book shrank over 1% during the same time period as CBA, who grew at 4%. So it's a pretty incredible result here from the bank on home loans.
Well, as this is the largest of the big four banks, it's got a market size that's of NAB and ANZ combined. So it was really good to see their loan impairment expenses being mostly steady. A good sign, as it shows that Aussies, in particular their customers, are repaying loans on time. The bank also highlighted its back to basics banking approach and its key innovative edge, which is miles ahead of the other banks.
That reference to back to basics there refers to the bank focusing strongly on home loans and deposits, the basic things that a bank should do. Matt Comyn, the CEO of Commonwealth Bank, also put out an outlook statement looking ahead to the rest of this financial year, and he did highlight a couple of risks, including bushfires. Take a listen to Jess Amir from Bell Direct for her views on the outlook statement.
Well, Matt Comyn has just passed his 2-year anniversary at the helm. He really highlighted uncertain economic times ahead, as well as the drought and bushfire impacts. But the good news is the bank is in a very strong position, plenty of surplus capital, which means it will continue to pay its dividends. But something we didn't hear about was returning money to shareholders after they made that $1.5 billion profit from selling their asset management business. But the company did leave the door open to future initiatives.
Edging closely to CBA in value is biotech CSL. How have they performed over the half, Ed?
They've performed really well over the half, Tom. Their shares are now, their market value is now $147 billion, just under CBA. So they're both ranked number 1 and number 2 on the Australian Securities Exchange. And they're a Melbourne-based biotech company. They make blood, plasma and flu vaccines, and sales were particularly strong for both of those products during the half year. They've made a profit of $1.86 billion, which was up 11%. And they've upgraded their full-year profit guidance as well. They're tipped to make about a $3 billion profit this year. So pretty good result here from CSL. The shares have gone up about 1% in early trade, and they're now over $326, which is the most expensive share on the whole Australian Securities Exchange.
All right, Ed Boyd, thank you. We'll keep updated throughout the morning. We're going